Look at the data coming out of the tax office right now.
And you'll see a massive structural shift happening across Australia.
More than $3 billion in digital assets are now held inside
self-managed super funds. And we aren't talking about institutional day traders here.
We are talking about everyday Australian families
Mums, dads, small business owners.
who have looked at the traditional retirement system
and decided they want direct control over their wealth.
Exactly.
But here's the problem.
Taking control doesn't just mean choosing where the money goes.
It means carrying the entire weight of compliance on your shoulders.
A lot of couples sit down on the couch,
like you and me,
set up an account and
they think they're doing the right thing for their kids' future.
But the legal landscape is shifting fast.
The government has already locked in the global CAF crypto reporting laws to roll out starting next year.
Which means the tax office is clamping down on tracking right now. And that means the regulatory leeway is
gone.
The ITO isn't looking at your portfolio performance.
They are looking at your structural architecture.
Our core philosophy at Borghi Consulting is simple.
Every single household is already running a small enterprise.
You have a balance sheet.
You have cash flow.
And you have risk. If you wouldn't run a business blindly without legal structure,
you cannot afford to do it with your retirement fund.
We don't care about predicting the market.
We care about mapping out your risk awareness.
So your family is
protected.
So let's skip the generic advice and look at what actually happened when an auditor looked at a family super fund.
So, what is the very first trap that catches people out?
The absolute number one issue.
The one that triggers immediate compliance audits is wallet mixing.
Let me paint a picture that happens every week. A husband or a wife has a personal crypto account they use for years.
They decided to set up an SMSF to hold crypto legally.
To save time or avoid setup fees,
they use their existing personal hardware wallet, or they set up a new sub-account on an exchange using their personal email address.
They think,
it's fine. I know in my head that this specific balance belongs to the super fund.
But an auditor doesn't live inside your head.
Not at all. The law requires strict, absolute segregation of assets.
Your personal asset pool and your super fund asset pool must have a permanent, impenetrable wall between them.
The digital wallet must be registered entirely, explicitly and legally under the corporate trustee name
of your
SMSF.
Let's break down exactly what that means practically for a couple sitting at home.
If they have a hardware device, like a ledger
or a Trezor,
can they just create a new hidden account on that same device?
Using a separate passphrase, or
is that still considered crossing the line?
It is a massive risk.
If that device was purchased with personal funds, configured on a personal computer, and holds keys to a personal portfolio,
you open the door to an absolute nightmare during an audit.
If you cannot prove to an auditor that there is zero overlap in control,
access,
or seed phrases security,
you are exposed. The compliance framework demands that the fund's assets are completely independent.
No shared keys, no shared accounts, no borrowing a personal account, just until the institutional account gets
approved by the exchange.
So the rule for the family business mindset here is simple.
Treat your SMSF like a completely separate human being.
You wouldn't put your neighbour's money into your bank account and promise to keep track of it on a napkin.
You buy fresh hardware.
You use the dedicated corporate trustee email and
you register it flawlessly from day one. That brings us to the second major structural wall.
The related party transaction rules.
Let's say a family needs liquidity inside a super fund.
Or maybe they want to rebalance their assets before the end of financial year.
The parents own some Bitcoin personally.
And they want to move it into the SMSF.
They figure, well, we will just transfer it from my personal wallet to the SMSF wallet. And
We'll document the exact market price on that day so it's fair.
can you do that?
Absolutely not.
Under Australian law,
An SMSF is strictly prohibited from acquiring assets from a related party.
which includes you, your spouse, your relatives, or your business partner.
It doesn't matter if you use the exact verifiable market rate down to the cent.
It doesn't matter if your intentions are pure.
That act of moving an asset sideways from your personal name into your fund is a direct compliance breach.
This is where people get caught because they confuse value with structure.
They think as long as the family net worth stays the same, the government shouldn't care.
But the government cares deeply about the pipeline.
Exactly. Every single asset that enters your SMSF must be an arm's length transaction.
If the fund wants to hold digital asset, the fund must use its own dedicated corporate trustee named bank account to deposit Australian dollars onto
A compliant Australian exchange.
and execute a fresh purchase directly on the open market. No shortcuts,
No sideways transfers and
no internal family swaps. Let's talk about the administrative side of this because this is where the daily stress actually hits families.
the Australian financial year ends strictly on the 30th of June. Individual tax lodgement isn't until the 31st of October.
But your funds accounting relies entirely on the exact state of your accounts at midnight on the June.
30th.
Traditional assets like real estate or shares are easy to value at
End of financial year. But crypto never sleeps. It moves 24 hours a day, 7 days a week.
how do couples handle the required valuation without failing their audit?
Good question.
You cannot just take a sloppy screenshot of your phone app at 5 minutes to midnight and call it a day.
The ATO requires an objective, verified valuation methodology.
You must use the closing price from a reputable, approved Australian exchange precisely at the close of the 30th of
June.
and you have to show the data trail.
You need the full transaction ledger, the exchange generated EOFY tax reports, and the public blockchain address records.
That match that exact valuation. If your records show that you move asset around on the 1st of July because you forgot to pull the report on the 30th of June,
Your auditor is legally obligated to flag it. Again, this isn't about trying to outsmart the system or predict where the asset value is going next week.
it's about building an high-tech structure today so your family
Isn't hit with massive compliance penalties 3 years down the road.
to wrap this up. If your family is running an
SMSF, or if you're looking at moving into this space,
you have to treat it with the exact same discipline as
a commercial business,
you need total wallet segregation
zero related party transfers,
and flawless end of financial year reporting trails. Don't focus on the noise of the market
focus on the foundation of your execution.
because when it comes to securing your family's long-term financial future,
Our rule is absolute. Structure,
before speculation, book a free 30-minute strategic consultation call with us.
using the link write down in the description below.
Let's make sure your structure is airtight.